A dramatic meltdown in cryptocurrency appears to have slowed. Bitcoin has rebounded above $30,000 but is still set for a record losing streak. Billions of dollars have been wiped off the market after the crash of Terra USD, a so-called stablecoin. Well, let's talk now to Jason Dean, who's a Bitcoin analyst from Quantum Economics. Welcome to the programme, Jason. So what's behind this big fall of cryptocurrencies? What's the reason?
Well, hi guys, nice to be back again. You've got to remember we are in very uncertain times generally, just macroeconomically. The picture right now is pretty dire. We've got monetary inflation all over the place. We've got banks trying to control that. We've got supply line issues. So there is uncertainty all over the place right now. But as you say, we've had some big moves in crypto recently, Bitcoin and certain other coins, due to contagion really of an event which occurred earlier this week, which I'm sure you're going to ask me about, which of course is UST and Terra. Basically, we saw a collapse there of something called a stable coin. And a stable coin is a coin which is designed to always equal $1. So 1 Terra, whatever unit you're using, always equals $1. And the idea is that you can move through cryptocurrencies and rotate between these currencies. However, these are usually backed directly by assets. In Terra's case, they decided something, experimental, something different, an algorithmic backing. It's a complicated thing, which I don't propose to go into here. It didn't work. It collapsed, and suddenly Terra was no longer equal to $1, which is a problem if you're a stable coin. So, of course, there was a wipeout, there was a meltdown, there's a collapse, and then there was a contagion leading to other parts of the cryptocurrency market. So all in all, broadly, it's a mess, and particularly in crypto, there's been a mess this week as well.
Well, let's talk a little more about these stable coins then. The clue in the name, obviously, they're supposed to be stable. So why is it such a big deal that they have lost this value?
Well, it is a big deal because if you think about it, there are several stable coins, by the way, and as I say, they're usually backed one-to-one, as you would expect. But if you're, buying $1, if you're expecting to hold $1, and all of a sudden that dollar drops to, 70 cents, 60 cents, right down to just a few cents, that is obviously a major problem, particularly if you've got large sums of money into it. And it shouldn't happen. The whole point of a stable coin is it always stays at $1. So it caught people out. It's the first time this has happened. And as I say, it's because of this kind of experimental approach, which, got to give them credit for trying, but it didn't work.
So how much would you say of this is a real loss of value, and how much is perhaps that the value in some cases has been artificially inflated?
Well, that's a fair question. In both cases, I would say it's significant. We don't really know for sure, but you've got to remember valuations come from what the market says the valuation is. It's as simple as that. All assets, not just cryptocurrencies, equities, anything, are all based on what market traders or buyers and sellers think it's worth. So those valuations, of course, you could say they're overinflated sometimes if the market's overheated, and of course they're undervalued sometimes if the market cools off. So at the end of the day, it's fair value, and you can only decide really based on that mechanism.
Jason, good to talk to you. That's Jason Dean from Quantum Economics. Thank you.